Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of December the 4th, 2017. Now, to get started this week, we're going to begin where we always do with the US dollar index and some main intermarket correlations that are driving the currency, commodity, and stock markets alike. So when we look at this right now, the dollar coming under pressure, but we've got a tax reform bill, I think, that's going to pass through. Hard to say whether it's going to be a good one or not. I'm not really in a position to comment, but what I will say with it is that it should stabilize the US dollar with the fact that this is passed. Now, the dollar right now is on a heavy trend line support area coming in at 92.50, but we can see that we have had multiple retracements this past week to the critical VantagePoint 18-day predicted moving average, and we have failed both times. So whether or not the dollar can recover with some of this conflict, we still have political uncertainty with Trump and this Flynn situation. But again, I don't think there's anything there personally. We look at the fact that, they're saying that Flynn has lied to the FBI and now he's going to testify against Trump. That's very difficult to say, and I really don't even want to speculate on that. But there is that political component here that's a problem. So the tax bill is behind us. Now we have to see if everything else settles down. Now, the indicators from VantagePoint, again, we've broken through the predicted MACD on the zero line, which is a very bearish signal, and we failed to retake the 40 level on the predicted RSI. So the dollar's still under pressure, but as I've said, it's been under pressure because of the aforementioned fundamentals. But when we look at gold here, and in last week's Forex Weekly Outlook, I wanted to bring everybody's attention to gold, and I had stated very clearly that the dollar will really only take a hit if gold can break up above this 1305 area, which of course it didn't. Now, based around that signal from VantagePoint with the medium term crossing over the long term predicted difference, again, that was warning us ahead of time that it was unlikely that gold was going to push through this area. Now, we are sitting flat on the predicted MACD, and we're recovering somewhat on the predicted RSI, but not enough to really change the negative outlook in gold. But again, the political uncertainty in the US could trigger another move to the upside. But largely here, guys, we are playing a channel, in my respectful opinion, between this 1265, 1268, and of course the 1305 mark. We're looking for a break of this channel. Now, the other commodities here, again, there is, looking at the VantagePoint software, we can see that the medium-term trend is weakening against the longer-term trend. Now, the longer-term trend on oil, we can see that our triple EMA cross from VantagePoint way back here on October the 6th. We've had multiple retracement points and we've gone higher. But again, this signal here it's a mixed signal because we've got our neural index higher, but overall, oil is still carrying somewhat of a bid here. So if it can push higher, may put a little bit of extra pressure on the dollar index, but I don't think so at this time. When we look at the global equity markets, they're recovering now with the political uncertainty. That's still there. But again, with the U.S. tax bill now looks like it's going to pass, or it has passed, then this should help support the equities. Now, my bigger concern here with the global equity markets is that when we look at Republican versus Democrat presidents over the years, predominantly, again, only in my respectful opinion, the stock markets have actually done better under the Democrats than they have under the Republicans. That doesn't mean that that's what's going to happen this time and that the equity markets are going to sell off, but we are very, very toppy here on the global equity markets. Now, as we come into our main currencies here, the Euros had a pretty wild ride this past week, but we can see that we are holding above this critical vantage point level at 118, and more importantly, 118.50. Now, if we can break down through this area, I believe 118 will come under pressure again by midweek or even earlier, based on a positive outlook in the U.S. It's difficult to argue that the U.S. economy is not doing well. It is doing quite well, so this should keep the euro contained. But if the euro is really going to show signs of longer-term strength, we must break through this 121 area, 120.50 for that to happen. But again, the indicators from VantagePoint here are quite mixed indeed. But we're crossing over the zero line on the predicted MACD, holding above the 60, so buying on dips still seems to be the best play here. And again, with that triple EMA cross coming in back around the approximately the middle of November, the end of November, that has continued to hold. So this keeps the downward pressure on US Swiss franc. And again, with US Swiss franc, what I've talked about with my own direct clients, my concern here is that I've been in this game for a very long time, and I'm used to trading US Swiss franc much higher than this, probably 112, 115. The US Swiss franc is largely based around the global equity markets. If the global equity markets are moving higher, so is US Swiss franc. Well, in this particular case, over the calendar year 2016 and 17, that hasn't been the case. That hasn't been the case at all. So now we're breaking through this trend line area, but I think we're going to recover and start moving back up towards this 98.56 area. We're closing the week very bearish at 97.54. But the indicators from VantagePoint are still warning that there is further downside ahead on this particular pair. Now, when we look at the pound dollar going next week, this Brexit talk here, guys, we want to be very, very careful around this pair because we're going to see wild swings. The reality of the matter is that we've had that cross here from VantagePoint, but the indicators are still mixed. Our medium term is weakening against our longer term trend, and we can see that our RSI is pointing back to the downside. Now, known area for order flow guys are going to be looking to sell up here around 136.50, so just be careful around this area next week because this swing high is going to be targeted, as I said, by order flow guys. They're going to look to sell into this area and take the easier trade. Big money always wants the easier trade, and I don't blame them, but the fact of the matter is the indicators from VantagePoint are somewhat confirming that the top side could be very, very limited on this particular pair. So I would look for a potential retracement back into this 130 between 133.73 and 132.98 before I look to buy this pair, and then I would also be a potential seller up here around 136.50. Now, as we come into the dollar-yen pair, again, this is a US Swiss franc trade. The dollar-yen trying to recover, we can assess that we have a pretty substantial bottom in place at 111, but we're closing out the week at 112.12, but we're still well below these critical vantage point levels at 112.28. 111.91, we've managed to close just barely above that, but what we want to see is a sustained break of 112.28. Now, we may get that next week because of this bill, this tax bill passing. But again, I have tried to gently point out the difference between the tax bills between the Democrat side and the Republican side and how it's affected the equity markets over the years. So that intermarket correlation, if that does come to any kind of fruition, what I just said, then that would suggest the equities are going to potentially go lower, which would also send dollar-yen lower. So be careful of that. But for next week, 112.28, we want to get above this area and close above this area for a couple of days in a row to take the pressure off the downside. If not, we are likely heading right back to this 111 area. And these indicators from VantagePoint are still quite bearish. We've got our predicted RSI barely, not even holding on to the 50 level, failing at the 60 level, and the MACD has crossed the zero line. You can see here the last time we crossed to the upside, that led to a rally from 109 all the way up to 114. So right now here, guys, it still paints a fairly bearish picture in the longer run, but we could see further relief again because of this tax bill passing. Now, with US-Canada, again, we can see a very clear identifiable range that comes in between 129 and 126.50. If we can break through this 126.50 area, that should trigger a move back down into the 124.80 area, excuse me. Now, our neural index is confirming a move lower. Our medium-term crossing over our long-term predicted difference to the downside, and a crossover in the predicted MACD USD, followed by 39.9 on the predicted RSI. All of these indicators from VantagePoint are saying US Canada is going lower. So we simply have to look for a retracement area to try and get short. So right now we can see resistance building at the 8-day and the 18-day predicted moving average. Those areas coming in at 127.87 and 127.66. So watch that area on Monday, Tuesday for a move higher to reset those shorts, but keep a very close eye on oil contracts. Now, our remaining two commodity currencies, guys, these are almost identical trades, as I've repeatedly stated here. And again, we are all tangled up around this on the Aussie-US pair. We are all tangled up around this VantagePoint 18-day predicted moving average, which I'll highlight right here. Now, that current level, 76.12. We're closing at 76.10. We could potentially have a decent long trade setting up here. We've got our crossover point right here from VantagePoint. You can see I've drawn a line on that medium-term predicted difference down here at the 75 level. Now, our predicted MACD has crossed the trigger back here several weeks ago. The predicted RSI, we want to see this thing above 60, breaking above 60, and a break of the 18-day predicted moving average at 76.12 will trigger a much bigger move, but we are going to need gold moving higher to assist with that. And right now, gold is stuck in a range. So when that range breaks on gold that I've discussed, whether it be the upside or the downside, that is going to trigger a bigger move on both Aussie US and New Zealand US. And we can assess here that New Zealand still the stronger of the two between the two commodity currencies, the Aussie and the New Zealand. The New Zealand is stronger against the US dollar. And again, a fresh buy signal is forming here, the neural index, the predicted differences, but we need to hold above 68. Now, we can further assess here that in my last week's presentation, I talked about this medium-term crossing over the long-term predicted difference in the opposite direction. I've then drawn a line on here to illustrate that, and we've come down and tested this area on Friday only to turn around and close back up above 68.72. So with that close of 68.83, it's still carrying a bearish tone here to this particular pair. But again, Aussie US and New Zealand US are almost identical currencies, and these two are also tied to the US CAD. So if US CAD can break lower, that will indirectly put some strength potentially into Aussie US and New Zealand US. So with that said, this is the Forex Weekly Outlook for the week of December the 4th, 2017.